Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share your opinion. Together with us to answer multiple choice questions about international accounting. Now, let's get started. The profit from liquidation and sale of fixed assets will be presented by the accountant as A. Asset item on the balance sheet. B. Owner's equity item on the balance sheet. C. Expense item on the income statement. D. Revenue item on the income statement. E. Revenue item on the income statement. Lala Company purchased a shipment for $100,000, which has not been paid yet. The company is entitled to a 2% cash discount. The value of the shipment when accounted for using the net value method is A. $98,000, B. $100,000, C. $89,000, D. $99,000. A. $98,000. Company LL, the ending inventory value is overestimated compared to the actual value, causing A. Cost of goods sold to increase, profit to increase. B. Cost of goods sold to decrease, profit to decrease. C. Cost of goods sold to decrease, profit to increase. D. Cost of goods sold to increase, profit to decrease. C. Cost of goods sold to decrease, profit to increase. In the condition of market prices tending to decrease, the net profit index when calculated by the FIFO method will be A. Larger than LIFO, B. Equal to LIFO, C. Smaller than LIFO, D. Higher than the average method. C. Smaller than LIFO. There is a situation of material A at Lulu Company as follows. At the end of the year, December 12, N, the remaining inventory of materials is 9,000 kg. According to the FIFO method, the ending inventory value is A. $99,000, B. $108,000, C. $113,000, D. $117,000. D. $113,000. On January 2, N, MIT Company received $30,000 in advance payment from customers for the contract to supply goods for the months of January to May. The accountant recorded A. Debit revenue received in advance $30,000 per credit sales revenue $30,000. B. Debit revenue received in advance $30,000 per credit cash $30,000. C. Debit cash $30,000 per credit sales revenue $30,000. D. Debit cash $30,000 per credit revenue received in advance $30,000. C. Debit cash $30,000 per credit revenue received in advance $30,000. On December 31, NHTD determined that the total receivables from customers that were 3 months overdue were $70,000, with a provision rate of 10%. The accountant recorded A. Debit provision expenses account $7,000 per credit accounts receivables account $7,000. B. Debit provision expenses account $70,000 per credit accounts receivables account $7,000. C. Debit provision expenses account $7,000 per credit accounts provision for bad debts account $7,000. D. Debit provision expenses account $7,000 per credit accounts provision for bad debts account $70,000. C. Debit provision expenses account $7,000 per credit accounts provision for bad debts account $7,000. Accountants adjust prepaid expenses to accurately reflect A. The amount of operating expenses on the income statement. B. The amount of liabilities on the balance sheet. C. The amount of operating expenses on the income statement and the amount of liabilities on the balance sheet. D. The amount of operating expenses and the amount of liabilities on the financial statements. C. The amount of operating expenses on the income statement and the amount of liabilities on the balance sheet. On January 1, NHTD Company received $42,000 in advance payment from customers for the contract to supply goods from January to June. The accountant recorded A. Debit revenue received in advance $42,000 per credit sales revenue $42,000. B. Debit revenue received in advance $42,000 per credit cash account $42,000. C. Debit cash account $42,000 per credit sales revenue account $42,000. D. Debit cash account $42,000 per credit revenue received in advance account $42,000. D. Debit cash account $42,000 per credit revenue received in advance account $42,000. HTD Company purchases inventory worth $100,000. The amount owed to HTD seller is paid in arrears under payment terms 2/10 and 30. According to the gross value method, the accountant records this transaction. A debit merchandise account $100,000 per credit accounts payable $100,000. B. Debit merchandise account $98,000 per credit accounts payable $98,000. C. Debit merchandise account $95,000 per credit accounts payable $95,000. D. Debit merchandise account $102,000 per credit accounts payable $102,000. Debit merchandise account $100,000 per credit accounts payable $100,000. Thank you for watching our channel. See you again in the next video.